From highs of over $60,000 per coin just 1 year ago to major crypto exchanges now going bankrupt. But something nobody's talked about is how the industry of Bitcoin mining has been affected. Just 10 months ago, I toured a $20 million Bitcoin mining facility along with an 18-year-old's crypto mining warehouse. And in this video, we're gonna check back in with them to see how they're doing today. To start things off, I made it to my friend JP's apartment. He lives in an absolutely beautiful building in downtown Austin, and I'm about to go inside and see how everything's been going. So this is your apartment?
My apartment, all the boxes.
Where are you moving?
I am moving to Colombia. The awesome view that I'm leaving.
Yeah, the best part about JP's apartment is this crazy view out here. Like, literally look at this. In January of this year, with Bitcoin around $40,000 per coin, JP's mining facility was earning $1 million per month. And with expenses such as a six-figure electric bill and staffing, he was still earning around $300,000 per month, which made this update very surprising.
Oh, how things have changed. Yes, they have. So Bitcoin has gone down from $45,000 down to $15,000. Profitability of mining has dropped by 80% at least. The value of those machines has dropped tremendously. We're probably at that one facility now mining, we're running $1 million, now we're mining $300,000, $400,000 worth of coins. So definitely has come down a lot. We've even added more machines there, and we built out a new facility since we last spoke, about a couple miles away, and that's scaled up. That's full now. Now we have 2 more facilities in the work.
While other mining facilities are going bankrupt and getting out of the business, JP is using this opportunity to buy miners for cheap and expand to new locations.
So I would say the biggest thing for us is that we did not take on debt related to mining machines. So we do have one investment in mining machines, but most of our investment is in the infrastructure that provides the services to people who want to mine. So what happened was these public companies, a lot of miners, they bought machines at $8,000, $9,000, $10,000, and didn't actually get a chance to plug in those machines fast enough for them to catch up with their money, to return the profits basically. We invested into infrastructure. So that infrastructure isn't as volatile and it's not as cash flow dependent on the Bitcoin price.
By hosting other people's machines and making a profit on client electrical use, JP hedged his position on Bitcoin miners. A lot of mining companies went all in on machines when prices were high, and by the time they got their massive facilities up and running, profitability for mining was down a ton, and they were now paying debt on machines that were down massively in price.
There's a miner in Dallas that just left all those machines in his lease. Miners like Riot have issues. Iris Energy defaulting $100 million of machine loans. Core Scientific saying they might have to go bankrupt. Compute North filing for bankruptcy.
And have you found now be an opportunity to really expand?
So I would say I think now is a much better opportunity than when if you would have looked at the market anytime between now and January. Is it the best time to get in? Is it timing the bottom? I don't know if it's the best time. I think we might have a few more months of downward pressure. Machine prices are still, I believe, a little bit oversaturated and need to come down in price. On average, when buying machines, you want to try to calculate your ROI to be under 200 days.
As you guys can see, a lot of Bitcoin miners like the $1,700 S19 Pros aren't even profitable if you mine with average electricity rates combined with low Bitcoin prices. But if you mine with something a little bit more efficient and also expensive, like the $10,000 machine, the Antminer L7, it'll make your money back in a little over a year if Bitcoin stays at the current low price. Meaning prices still have a bit to fall, or Bitcoin needs to rise for the 200-day ROI to start to present.
There's 4 cycles of Bitcoin mining. You have your gold rush cycle, which is one we just got out of. Then you have your bear market, kind of entering in where you're losing your profitability. Then you have a shakeout cycle where you have people going bankrupt, people spire selling machines.
Is that where we're at right now?
We're right now in the shakeout. And then we have an upward trend, which will then show an increase in price before we get to that gold rush again. Ideally, when you're mining Bitcoin, you want to be doing it where you're selling your machines in the gold rush, you're selling your coins in the gold rush, and you're buying back right now when equipment is low.
Luckily, JP's been in Bitcoin since 2013, and he's seen multiple of these cycles. So he's positioned himself in a way where he's breaking even, if not slightly profiting during bad times. And when times are good, he's making stacks. Unfortunately, not everyone's been this lucky. Earlier this year, I went out to film with Dason Thomas, an 18-year-old who went from working at a pizza shop and then a gas station to making $200,000 trading stocks, and he used that money to buy his very first rental property along with invest over $100,000 into Bitcoin miners and a new warehouse facility. But before we drive out to Minnesota and learn about how his crypto mining business went bust, this portion of the video is sponsored by Stash, a personal finance app that simplifies investing and makes it affordable to start building wealth. I got started on Stash about 6 months ago, and my personal favorite thing about it are their fractional shares where you can buy small portions of major companies for $5 or less. And with Auto Stash, you can invest that same amount weekly into any stocks, which helps helps you follow your investing plan and build wealth. Stash also gives you the ability to invest in crypto, and with tools such as the crypto calculator, they'll help you keep a more balanced overall portfolio, and they'll also offer clear support and guidance along the way. So click the link in the description to get $25 to start investing and join the over 6 million people who use Stash. With Stash, you don't need a lot of money to start investing. They offer 2 main plans starting at just $3 a month, so be sure to get started. And now let's continue our trek to Minnesota. Thanks to Stash for sponsoring this portion of the video. Now back to it. What's up, bro? Good to see you. How's crypto mining holding up?
Let's talk about that.
In 7 months, Dason went from his own crypto mining warehouse to moving out due to electrical costs, being forced to liquidate miners, and finally being back at his old gas station job. Ladies and gentlemen, I have now made it to Dason's work, and we're gonna go visit him at his job. What's up, dude? How are you doing?
Good, what's going on, bro?
So tell me about this job.
When I first started working here, I worked here for like a year and a half.
And how long did you take off before coming back?
A year.
Are you editing a video here?
Yeah, editing the podcast right now.
What Dason likes about this job is he can work on other businesses like editing videos, day trading stocks, or going live on TikTok while working. So you said since you started working at this spot again, your views on the lives have been way up, huh?
They have. People just like watching me work minimum wage.
Do you want to answer why you're back at the gas station?
Bro, I've answered this question like 30 times. So, I'm broke, that's why.
Just because of the Bitcoin mining?
Yep, lost like 200K.
The comeback is about to be insane. The comeback is about to be insane, huh?
Yeah, bro, I'm a hustler, man.
Now, although the gas station is good for TikTok clout, I wanted to hear the full story of what happened.
We were renting a facility. We had electrical issues, right? So we thought that we were paying 4 cents per kilowatt hour for electricity, which is just a unit of measurement. And we ended up paying 15 cents. And then the next month, the price raised to 16 cents. And then it ended up being like 17 cents the last month that we were in there. And so we were charging less for electricity than what we were getting paid. So we were just losing a ridiculous amount of money.
And if you guys know anything about crypto mining, your electricity costs pretty much determine your profitability. Similar to JP, Dason was hosting miners for other people, but with electricity costs higher than he thought, filled with a bunch of hidden fees, the more miners he was running for people, the more money he was losing.
We decided to move out of the facility, and there was a bunch of other reasons too, like our electrical usage. We couldn't even use the entire infrastructure that we had put in there, right? Because we invested like $10,000 in outlets alone, and we could only use 2 outlets, and then if we used the third, the entire building would black out.
I guess going a little bit more into this, what was your electricity bill like in those first months, and how did it continue to like rise?
Yeah. So with rent and then electricity, like the first month it was $3,000, which is fine, you know, and then every month, bro, it just kept increasing. So then the next month it would be like $4,500. The month after that it was like $5,000, and then it just kept rising. And I was like, we're bleeding too much money to continue to do this. Like we had to move out of this space.
Dason's crypto mining warehouse became a logistical nightmare, and he was forced to liquidate some of his miners to pay for electricity and other losses.
Obviously, we put like $20,000 to $25,000 just in the space, right? We had outlets, we had racks, we had all this infrastructure, and then we can't take the outlets that are ingrained in the floor, you know, with us when we go move to a different facility. And then on top of that, they wanted us to install a $70,000 HVAC system to take the heat out for some miners, so we were gonna lose money on that. And then they also wanted us to spend another $20,000 just to use the outlets that we had already put in there, which was absolutely ridiculous.
And when you combine all that with his crypto holdings tanking, the depreciation of his miners he bought at peak prices, and finally losing $10,000 on the Terra Luna crash, his total losses are about $200,000. But on the bright side, he still owns a duplex rental property and some crypto miners in his parents' garage. We just pulled up to Dason's parents' house, where some of the remaining miners are still in the garage. You can hear them behind me. He's opening the garage up right now, and we're about to get a tour. Are there less or more miners here than last time?
There's a lot less miners in here than last time, but I'll show you exactly what I got and what I got running. So in here, I only have my L7s running. Most of my other miners I turned off because they're not profitable right now. As you see, these 2 are running. I got the rest of these all turned off. Most of them are also in storage too, and there's some back here in the corner. Some of them are boxed up over here too. So we're just gonna hold until the next bull market, and then we're gonna run them again and make more money.
It's kind of sad. I remember last time we were here, there was a bunch of miners. It was super loud, but
I mean, we still got a couple, but we're definitely struggling.
You know, looking at these miners, this L7 down here is running. How much did that cost you, and how much is it worth now?
Yeah, so it cost me $26,000 when I first bought it, and now I can probably sell it for $9,000 to $10,000.
At the end of the day, Dayson's doing a lot better than most 19-year-olds, also owning a duplex rental property that usually cash flows around $1,000 a month, and when crypto eventually comes back, so will a lot of his investments. That is, if crypto comes back. Before I left both JP and Dayson's house, I asked them both a very important question.
Are you still bullish about crypto?
Yeah, no, 100%.
No question.
No, like,
any doubt whatsoever.
Bro, no question. Like, you look at even the government, like, they're implementing CBDCs, which is central bank digital currencies.
What do you have to say to like those people who think that Bitcoin's never going to go back up to the previous highs?
What I would say is there's a reason why over the past 10 years it always has gone up, and it's not because the technology is changing. It's not because the CEO of Bitcoin said that there was a new product feature coming out. It's because it's resilient and it's the best way to store value across time and space. Those are real world investments going into infrastructure across the world, electricity payments being made every day, every month for securing the Bitcoin network. Those coins have inherent value because there's so much energy required to extract one. And so when the halving event comes and Bitcoin mining becomes twice as hard, well, the price has to do something. And we've seen that it goes to 10x.
Ladies and gentlemen, I hope to see you all rich in 2025 during the next bull market. Drop a like if you enjoyed this one. Check out the sponsor stash down below, and I'll see you guys in the next video. Peace out.